Hey, Steve. Well, at least you
Hello.
got power.
Yeah, we got power here, but Andy has like 15 minutes on and 40 minutes off, so it's just not going to work down there today. Same with Jamie. Jamie lives in a smaller town, and they have water pumps in that area that they basically, for whatever reason, just shut down. So it's no fun to live in Texas right now, and two of our trainer, educator guys are feeling the brunt of that. So I will press on without my friend Andy today. I'll do my best to keep an eye on questions. I will have a section at the end here where we finish off where we look at charts, chart requests. And in this particular case, I'm not going to go through the A table this week, but if there's anything you guys see on there that you want me to look at specifically, we can use that for a chart request at the end. But the point being, I've got some things to talk about, and I might not catch all your questions because I don't have Andy furiously manning the questions panel typing away. But nonetheless, we'll get going here for a Tuesday. Feels like a Monday, but it is a Tuesday. We are a software as a subscription company. We're not a financial company. We're not advisors. I'm not an advisor. I'm just a user of the product for many years, an employee for about 6 years now. And anything I say or talk about with charts or particular names are not designed to be a solicitation or financial advice. It's just my opinion. All right. That being said, we have a very rich product. It's not something that can be learned in 5 days. Many times it takes you a couple weeks to really custom tailor it how you want this product to work for you, because trading is an art form. It's not a science. And so Trade Ideas can be a nice art package to help you paint the picture you want. But be patient. It's not easy to learn in one day how to extract what you want to see from this platform. I mean, we do get our fair share of emails, and some of you probably nod your head and understand what I'm about to say. They buy a subscription, they log in, and then they see that toolbar and nothing there to tell them what to do, and they just kind of click a couple menus and they get a little overwhelmed and they say, I don't know if I'm ready for this. And we hate to hear that, so we try to have as many focal points as possible to help you make that jump to the next learning curve that I'm talking about. You can't be impatient and want to see everything overnight. So we have Barry's room all day long. He reminds us, send people to his room, and please don't be shy about asking a question. We mirror his room as a YouTube live stream as well. And in that YouTube live stream, one of us will take over on the noon Eastern hour every day. I did it today, and expect even more people to come at us. And, I had a person ask me on Twitter, this is the perfect scenario, whether it's an email or Twitter, whatever. They said, hey, when can I get a couple minutes, to run a scan by you and have you show me? I said, great, come by the noon session. He did. He came by today, dropped in, he typed exactly what he was looking for. We spent about 5 minutes in front of everybody working through how to configure what it is he needed. And whether anybody needed that same scan or not, they benefited as well. And the user was certainly happy that he was patient and was able to get, a good feedback and a starting point in the cloud code that I gave him by using that noon support session. So we can't emphasize that enough. Some people want us to be available all the time. Some people want us to just pick up the phone and have a one-on-one with you. We can't do that. You wouldn't believe the growth we're experiencing right now. We're experiencing a lot of growth, which is a good thing. So we're trying to be efficient with it, and I'm just trying to hammer on that point that we've got a lot of nodes throughout the day in which we can help you guys learn and get what you want. Phone calls just don't do it, and we can't do it. So there's the support session I mentioned earlier. There's the link at the bottom, trade-ideas.com/live. It's a redirect to our YouTube page. And again, once you've watched that live noon live stream on our page, YouTube picks up on that. The algorithm knows. So I guarantee you the next time you open up a YouTube page, it'll say, hey, Trade Ideas Live, and you can just click right into it. It's super easy to find. All right, I got some things I will talk at you about today. And just a reminder that, the human and the machine element is very important. We can't expect people to just turn on a machine and go play golf or go to a second job and have it work for them. You've got to work together, and the machine, or in this case, our AI or our screeners for that matter, once you tell it what you want, the technology works with us and serves up the ideas in real time, and then we take those ideas in real time and manage them. I'll I'll continue on that point here in a moment when we talk about the AI. But just in intro, which I always like to do, the theme is human beings and machines combined are going to give us the best results, without a doubt. One can't really do well without the other. So again, I'm shooting alone here as people come in that might not have heard Andy's not with me today, so I might be a little negligent on the questions box, but if you have a chart you want to look at, you can save that for the last segment and we can go over those together because I think people do appreciate and like that part of it. I'll start with market recap. Not much really to say, not much has changed. I'll do the AI recap. I'm just going to go over 2 stocks and 2 simple ways in which you can use the AI. That's the way I'm going to recap the AI today. Our trade of the week, you know, I tell you, another freaking gap up. And when things gap up as much as they do the last 3 weeks on us in a row, it really blows the trade up from a perspective of having a plan. But fortunately for us, right, you guys, we talked the last 2 weeks about how to handle large gap ups. So we have yet another fun example to go over today. Haven't done a sector check in at least a month. I think it's always a wise thing to look at the charts and say, hey, you know what? This sector tomorrow might be one to keep an eye on so we can find some value in that together. And then I did show the jam down scan again last week, and boy, it was serving up some beauties. But I'll show you in a minute. It served up some real clunkers today, and that made me think I need to back test that. I haven't done that in a while, and I found some interesting data in that. We'll go through that. You can see how we can use the back testing to elicit data from time to time. And then, as I said, the last 5 minutes or so, we can do chart requests. And I'll go till about 40 minutes after the hour till I'm all talked out. But let's turn that off and get to the first segment, which is market recap. I always start off with the S&P daily chart here. Look at this stretch. I mean, how far back did we go? This goes back to pretty much Thanksgiving. Just a grind higher, albeit with a couple of fun little days along the way here. We had one last week. We had little mini ones here 4 or 5 days ago. So this market has nowhere to go but up, but every now and then it throws a fit and likes to just stop the music and see who runs for the shares. Perfect example of that was just a few days ago on this day right here. Market gapped up. It was already tired, and then the algos just turned off, and you know the people who had weak hands and wanted to take profits took them, and the ones who recognized buying opportunities said, hey, I'll keep my powder dry and jump in here. So it's just a continued anatomy of a market that has no bear case to be made whatsoever. It's above all key moving averages. It's above my 5-day rolling average there on the 15-minute. But you know, as I said, when the price gets a little bit too far above these averages, it starts to get tired. I will submit to you that, you know, it's kind of hard to see it, but that in itself is like an ascending triangle. It's an ascending wedge. It's a very bullish consolidation, probably one of the more bullish. I call it the train leaving the station because a lot of times you don't get much of a pullback. It's just kind of a wedge pointing higher, and that's extremely bullish. There's just no bearish case to be made here whatsoever. If we go to the Nasdaq, real slow grind over there. The real thrill has been, at least lately, in the IWM. And as we pull this up now, interesting to see, we've had some very nice, healthy consolidation in the small caps. So some of you have probably seen the wicked tear that the small caps have been on over the last couple months, and they just haven't stopped. So this is kind of showing me that we might be in for maybe some more small cap movements in a day or two. Could be a day or two away there in that respect. But again, if you are short this market, you're waiting for Superman to come and rescue you because it's not happening. We still seem to be very much in the fear of missing out. Oh, let's talk about Gamestop. Why not? Since everybody wants to talk about kind of that story. You know, there are people that think it's going to come back to life. I am not one of them. I've been watching markets too long to see that these things usually end in the way it's ending now. I don't see a resuscitation really coming back. And what I do see, matter of fact, is let's do this. Let's just zoom in so we can actually get some more perspective here. It's not going to let me. Really not going to let me. Very tight ranges here. There we go, finally. My God, this is what I see. If you're in GameStop and you're a hoper, this is not your friend right here, because tomorrow I think GameStop is going to run right smack into this, and it could force the issue for the next leg lower. When I say it like that, the next leg lower. I just don't see this thing recovering. I think it was a fun story while it lasted, especially to some of the other ones. I think, one of them was AMC. Yeah, same story over there. The moving averages are going to have something to say here as it comes back into play. Better perspective over there. So as far as the market recap goes, there we are. Nothing really to say that can bring this market down. Now, the closer this moving average gets to that ascending wedge consolidation here, the better for the bulls, meaning there might not be as much of a threat of that nasty downdraft that we seem to get from time to time. So play accordingly, take your profits when you can, not when you have to, and just be aware that, they can pull the rug out for a 2 or 3% move at any point in time is deemed necessary. So that is that for the market recap. I'd usually ask Andy at this point if he has anything to add, and Andy would say, no, I've nothing to add. My goddamn pool's frozen over and all my pipes are bursting. So he's got bigger fish to fry. All right, let's move on to the AI. And here's what I'm going to do for the AI today. I'm going to pick 2 trades, and I'm going to follow up on that theme that I mentioned on the intro slide. It's human and machine together, working together. And the AI serves up the value in the entry. And that is where the value is. The AI finds the moment in time, the stock in question, pulls 4 letters out of thin air and says, now's the time, go long, go short. Once that happens, there's really nothing left for the AI to do of value to benefit you in the trade, because you, a human being, are going to be a much better manager of risk as the day folds on and more data comes in and you can manage the nuances. So what I'm going to suggest to you is, let's pull the pen out here. This is a short sell, so remember we're going down here. There's the arrow pointing down, and here is our buy level, that blue line. Well, right off the bat, the AI is suggesting that's your stop level. And at the point of sale, at the point of entry, great, more power to it. But we move on an hour down the road here, and all of a sudden you can see my favorite moving average, the 10-period simple moving average. And this is always going to corral and keep the price moving in the momentum direction that it was intended to move in until it stops moving. At that point, we notice that the price closes back above the other side, in this case, the short. If the price closed back above that declining line, we would say, oh, I'm going to manage this trade, and I'm going to get out of this trade, because I think that's the moment where the momentum is waning here to the downside. But in this case, this was the best trade of the day. The AI actually also gave us a target, which is a really interesting case. It's wonderful that we had a target. But let me just ask you this. If you were in this trade, was there any reason to sell more than maybe half? I mean, targets are great, but at the point of hitting the target, the price was still hitting lows, and it was still well below this 10-period moving average, which kept the price rolling all day long. So I would submit to you, again, the value is in the entry in the symbol that the AI gave us, but from there, you take it from there. And as this particular one is a very simple, clean chart, and all these charts are not that clean, I understand that, but this is a good example of just how we never got a single candle to close above that moving average, which just kept telling us in the moment, stay in the trade, stay in the trade. Now, again, nothing wrong with sell and a half right there. That was the target for the AI. It's probably always a good thing to take some off the table when you can, but that would have been a great way to manage you and the machine working together. And I would say, just to add to that, once this trade got working in our favor down here, this no longer should be your stop. All right, this was a suggested stop right on the open. What should be your stop? What I mentioned earlier, the minute this candle closes back above that declining moving average, that becomes your stop. So you can do it a much better way. Yes, you can always add more moving average lines if you want, Scott, but I choose to want to keep it as simple as possible. And when something breaks and breaches that 10-period simple moving average on my 15-minute chart, it usually is an early warning that momentum has died, and I'm probably better off making a decision at that point to either, save what I've got in profits or sell some, but it's usually a good signal. Now, that was a happy winning strategy. Let's go down to the bottom here. The first one that stopped out, stop hit gold, interesting, okay. So in this case, we're going long, and there's our buy line right there. And here's our suggested stop. Okay, that's a good suggested stop for the open. But look at what happens right off the bat. This trade is not working. it's above our declining moving average. Okay, so that's got that going for it. But the very next candle stops and kind of rests on that moving average. And then we get what we don't want to see, the candle closing right there under the moving average. So I would submit to you, this no longer becomes your stop. That candle, that moment becomes your stop. And in this case, we saved a little bit of headache versus what the AI had originally given us. So the point here being is try to keep it simple. Use the 10-period moving average is what I particularly use to make my decisions. And then as the trade develops, you can manage the risk accordingly and not just try to make it so cut and dry, black and white. I mean, the AI, we want to look at numbers here, the AI made $199 on its entry and exit because it hit its target and said, I'm done. But as I said earlier, there was really no reason to get out of that short trade. So carrying that trade longer, you had a lot more money and profits that could have been made in that particular case. There's no way to have the stop automatically close. You know, it's a good question, Stephen, and it's a common question. The trailing stop function as an auto trade is not really developed the way we would like it. So you need to really manage it accordingly manually and then just wait for a closing price above it. As it is, even one trade ticking below that moving average would likely trigger a sale, and that's not always the case. I don't always want to get out just because one or two trades drop below, because if the buyers jump in, they're going to support it and pop it back up above that. All right, so that's my AI, kind of short and quick on the two long and short stocks. One was a target hit, one was a stop hit, and how you could have managed those maybe a little more effectively. You're never going to be perfect, but you're going to be much better than the AI at managing the exit. That much I can tell you. Yes. Okay. Let me grab a quick drink. What did I want to talk about? Oh, yes. So the trade of the week. Trade of the week, once again, was on our A table. And, I noticed it. And if you recall, last week, I gave a couple of also mentions. I gave AR, which is a crude and petroleum and natural gas extraction company, okay? I also gave RRC last week. But it kind of gave a false breakout that Thursday, that red candle, and pulled back nastily, if that's a word, and then popped right back up into play. So by the time the weekend came around, this was a stock in a sector that's been catching my attention lately for sure. We're going to look at sectors again in a minute. But, you talk about the cup and handle. It's kind of an elongated handle, but that extra couple of days. But what it did is it kept it on the radar for another 5 days. And so going into the weekend, it was still on my scan. I had been watching it all week, and I thought this is the time to call it based on all the other stuff I was seeing. Again, look at what this AR has done. It basically has more than doubled. It's almost tripled with a very nice trend. Well, we go back to RRC, same type of company, moved out of that base, but it's been going sideways for the most part here for a few months now. So I think there could be some meat on this bone. Let's move forward to the fun. Again, third week in a row, we're talking about what happens when a giant gap up blows out our plan. I mean, again, it would have been nice to have come up from underneath. That blue line is our entry, or was the called entry, but it would have been nice to open flat or even lower and then boom, come up through it and trigger and then have momentum and carry higher, but we didn't. We got the overnight, you can't participate. I'm not even going to put it on, but I checked. There was no opportunity even pre-market to get down here at the entry price at 1034. So you were literally forced to wait until the open. Okay, so let's play the time machine game as we like to do. Last 2 weeks, what I said really came in handy today. And you can see the buy tag is my actual buy. It's a mirrored account from the simulator, but I've bought it 2 other accounts that I trade. And I did what we talked about last week, not chasing the 10, 11% opening on the gap, just saying, okay, let's just check back in 75 or 90 minutes and see what happens. I actually had a limit buy just in case it got down. I had it at 1053. Stock price got to 1055 and kind of bounced up a little bit. And I said, screw it, cancel, replace, boom, and I just got in. So that was my entry for the most part. But the point being is, just as we've been talking about, I think that's about the best entry you can give yourself. Now, 2 things can happen from here. It can be the world's perfect entry and it bounces right up and you feel super smart. or it did what it did in our VP last week and starts to bleed a little bit. All right, well, let's see what happened. Holding, feeling good up. Okay, well, there's a closing candle below the moving average. So all of a sudden, maybe it's not as strong as I thought. So what do? I'm going to look left. I'm going to see what is the next point of interest. Well, the next point of interest just happened to be the trigger price, which was just a penny above that little peak high there on Friday. As you know, a lot of times I say, and it's just fact, that prior resistance levels can turn around and become a future or present support level. And that's what we call a pivot level. So once this thing bled through my favorite moving average, I said, okay, well, I'm not going to sweat it. This is a day trade. I'm not scalping this thing. In the bigger picture, I got to remind myself, this is a beautiful looking chart over here. We got to gap up. Now, at the time, I remember talking to the guys in the noon session that I mentioned. This is what the candle looked like. I said, well, guys, this is why I don't make decisions in the middle of the day to get out of a trade that's not working for me necessarily, because by the end of the day, that red candle could turn around and have a really nice bottoming tail to it. Well, what do you know? We got what we were asking for. But back to our intraday time machine here. Okay, looked like it was trying to hold 3 candles in a row, trying to hold that 49 level, and then a little dangling candle below, another one. And I thought, oh, it's just a matter of time before it's going to touch this blue line, and maybe that'll be it for the algorithm shuffle. But, you know, it never touched it, interestingly enough. Gave us a nice closing candle that says, hey, I'm back in the game here. Look at me, I'm closing back above the 10. Here's another close, and then another third close, definitively back in the game above the 10-period moving average here. So that was the worst of it. I think the only thing to really gain here is just look back, and when that level didn't hold, just look back and think what can be the next level of interest that could be the case scenario. That level was the first one. If that had breached, then a complete gap closure would have been down around the closing candle of Friday. That could have been acceptable as well. But the point being, by the end of the day, we need to see how the stock goes out. What are the true colors? And by the end of the day, a nice, beautiful close above the moving average and even a penny or two higher after hours. So this one's off to a good start, and I'm really pleased with the way the look gave us now at the end of the day. I've done it before where I've sold. I'll just draw it in there. I've done it before where I just, for whatever stupid reason, middle of the day, you're not getting your prices, things aren't going your way, and you're like, ah, dang, this thing isn't going to break. I'll just sell the middle of the day. But this is why I wait until the end of the day to make sure what's the true flavor of the stock. Nice volume bar there as well. So all systems looking good for this. I know there's no target in there, so let's just go left real quick and see what might be out there. I'll go to a weekly. If I can get a weekly. Reset connection sometimes is the trick. All right, let's zoom in on the weekly. Okay, so we've got a lot of congestion here. This is interesting. Oh, okay, so at one point that was support, and then that point became resistance. So we have a little pivot line coming up here. Let's draw a horizontal line and see what that level is. Okay, I'm going to call it 1194, 1190. So maybe what I'll do is I'll move my price alert up to 1190 and just remind myself that might need to sell a little bit there. There could be some resistance perhaps, but I hope not. I hope this is a trade that's going to at least blast through there or sit there for a day or two and then move higher. And we can start talking about this level back here instead, which is much higher. All right, so that's the trade of the week, and I think it gave us some good content to, again, since it's been the flavor over the last few weeks, how to deal with a giant gap up that kind of throws a monkey wrench in our plans for sure. All right, moving on. Doing good on time, doing good on my voice. What I wanted to get on the next thing was, let's just look at the sector check real here. And I have a feeling that we might get some confirmation of this oil and gas in our sector check. So let's go through. This is my sector window. I'm going to start. The strongest sector today was steel. I'm going to be looking here mostly at the daily chart, things that are consolidating, things that we always like to see, nothing that's chased. Steel's in the midst of a rebound there. Okay, OIHs. This kind of comes into play with RRC and the other ones, oil services, kind of trying to break out of a little range there. Definitely running into a little resistance, but we'll see how that resolves. energy, same kind of a thing, actually broke out of a little resistance there. Now we're dealing with the financial banks. Nothing seems to be holding the financial banks back in the last few days. But I'm looking for what's going to be interesting tomorrow. What's moving sideways? What might be ready to move up and not be a 4 or 5 day chase? This is also coming into play oil. Okay, here's the oil commodity grinding higher, moving through those key moving averages. That could help our RC as well. That's a chase. That's the Chinese stocks, so we'll stay away from that. That's chase. The semiconductors have been just absolutely super strong. But again, boy, a lot of things are really having those 3 or 4 day bounces. I haven't seen anything that's really definitively consolidating worth note. Spiders. Okay, well, there's silver. Actually, I've got some thoughts on silver because remember a couple weeks ago, PSLV was our horrible gap up. Oh, you know what I was doing? You guys, I'm so crazy. I was stuck on weekly. Let's start over. That's why all the charts were looking the same. That's so funny. Okay. Jeez, that's so funny. Very nice breakout on the energy spiders. That's a whole different ball game to me. Very nice breakout, and that's kind of what RRC did today. Really looks good. I can't believe I was on a friggin' weekly chart. Very nice breakout. That's why I wasn't getting any consolidation, you guys. Very nice breakout from consolidation in those 4 days in the steel charts. You're going to see X and CLF showing up in those names specifically. OIH is another nice breakout from consolidation, a little bit of a gap. So definitely steel and energy are certainly strong. Okay, different flavor there in the financials. Nice sideways action, and then coming out the chute. You know, this is a big, this could be interesting in the airlines. If you guys like any of the airlines out there, that could be something to watch. There you go. Look at that. Love might be ready for a move higher tomorrow. Jetblue as well. So Love and Jetblue might be ones you guys want to mark down. Financials, again, we saw that. Oil grinding higher. And this is about where I started to realize I was working off of weekly charts. All right. Nice sideways action in the Dow too. I mean, I just don't see a case for not moving or grinding higher. That's XRT. XRT got totally blown out of proportion because of the Gamestop thing. Gamestop was a ridiculous component of that ETF, so it blew it up. What I was going to say a minute ago was PSLV was our trade of the week a couple weeks ago, which got blown out, but it's been holding up better. And this is what I want to talk about. SLV is coming under some bad PR. I think they're starting to get the finger pointed at them for not having enough reserves in the commodity, the physical that they're supposed to be backing. Hang on one second. Come on, SLV. There you go. So SLV has been kind of moving sideways, but PSLV has been holding up a little bit better. Got ahead of itself today, actually, but keep an eye on that. They supposedly have a much better physical backstop to their ETF. Yes, Elena, I can share the ETF window, but what happens is, you know, when I share the window, I still have to share the contents of it because it's a symbol list. And you know, I can put the window itself, the cloud code there. That's the actual cloud code for the scan, but you will also need the symbol list, which is the ETF list of these 30 or so odd symbols. So I'll drop that in the chat window as well. You're gonna have to tie those together to make that window work the way I'm making it work. There you go. All right, so far I noticed the airlines looking really interesting. I don't know how much I can trust XRT. I think there might be another ETF that might be better than that. But silver, keep an eye on silver, but don't use SLV, use PSLV. I should probably put PSLV in there. I'll do that next time. All right, what else do we got? There's the Nasdaq. There's the same as the Nasdaq. There's our IWM. I talked about that earlier. Again, we might be a day away from a nice consolidation breakout in small caps. Once again, you know, for the life of me, I can't figure this out, guys. Maybe somebody else can, but you know, here's COVID low down here last February. And I don't know about your city, but my city's traffic is pretty much gone. And I know buildings are kind of empty. People are working from home. How the hell is commercial real estate staying so strong? I don't know, but it is. Gold looking a little defensive there, much worse than silver. Silver's much stronger looking than gold. Oh my God, the bonds look terrible. Stay away from the gold miners because they look pretty bad too. I think the moral of the story is keep an eye on the jets tomorrow. The jets, the planes, and also our energy spider really had a nice breakout from consolidation. And maybe what's going on in Texas too might start to fan some headlines. We'll see what happens. All right, last thing I'm going to do before I call for, the end of the segment where I can look at a dozen or so symbols, and I'll give you guys the unvarnished truth as to what I think about the symbol that you put up there on a daily chart. We looked at the jam down last week, and the jam down this week, just nothing. Everything that came through today failed, and I think that's kind of sad, but maybe it's more telling than anything. There was not a whole lot of good stuff that came through today. So that was my thought process. I said, well, what happened if I just backtest this? Because remember, this is a swing trading entry. It's not really for scalping. So let's do something because I want to show you something here real quick. Backtest strategy. And as I told you, I only like this thing in the first 90 minutes of the day. So I'm just going to scan the first 90 minutes of the day. And we're going to hold it for 3 days, today plus 2 days, and then sell at the open. I always like to sell at the open to try and get that gap. Risk management, risk 3% to try and make 10%. And then let's go ahead and scan the entire 61 days. I'll just click simulate buy and see what we get here. Well, I know what we're going to get because I already ran the scan, but it just kind of proves a point. The point is, when I looked at the history this morning, I thought, boy, this thing is just a real dog today. But it is what it is. For whatever reason, these types of plays weren't working today. Maybe it's the underpinnings of something that's just not going to work anymore, or the beginning of a change. I don't know, but one thing is for certain: when you backtest something, it's not golden for life. It's golden for a couple weeks, because the market dynamics are always in change, and they're always moving, and they're always in flux. So look at this. This is an interesting result. I mean, it's a good result. I mean, if you were doing these risk parameters, you could start with a $50,000 account, and you got it up to about $74,000 in a matter of 3 months. But you had a fun ride here. You had a little scary ride here. You had a lot of boredom here, and then another fun ride here. So over the bigger picture of 3 months, it just goes to show you that things can work in an environment we don't know why, meaning this. And then coming back again, they've been working like crazy. But I guarantee you when today's data comes in, it's probably going to throw a clunker in and this thing's going to pull back a bit. But when I go back and look at the market, let's go back to January. And when I start to click through, oh, look at them. Okay, so that's the end. Okay, the beginning of January is pretty much that dead period. So the whole month of January, you just kind of pulling your hair out. This thing really wasn't producing in the bigger picture. Let's just, for the sake of seeing what January looked like in the S&P, January was pretty much this. Okay, so the backdrop of the market is going to dictate a lot of how well the strategy does. And then we fast forward into February, look at all these bottoming tail wicks. Yeah, that's the kind of stuff where the jam down works. That's the kind of market environment where the jam, but for whatever reason, we didn't get it today. But it's just an interesting way to go back and look at a set of data on the back test. And a couple things. It reminds us that these things don't always work, but when they work, and then they stop working, and then they might come back again. So you got to kind of stay on top of them. But as we look at this dead spot here in the middle, it just corresponds perfectly with what was happening in the general S&P for the first month of the year. How do you scan for pre and post market? The best way, Michael, is to go to our channel bar. We have a pre-market and a post-market, and then you can open up the guts and look at the scans and see how those are configured. And you can at any time right-click and just save one of those scans to your cloud that you see on the scan, and you start to do a few of those, and before you know, you can build your own layout with good-looking stuff. All right, I'm going to go for a little bit longer here. And again, this is the segment where I will take a look at your guys' requests for a stock chart. And let's see if we can find something interesting. And then I'll bring Scott in for any last minute announcements. So we'll make our daily chart nice and big. And let's start and see. Looks like the first request is going to be RVP, last week's. Great place to start. Last week's trade of the week. Okay, perfect example. Maybe some of you have heard me use the word backstop. All right. Here was the RVP breaking below my 10-day moving average, which means it's not doing what I expected to do, and boo, I don't want to be in it anymore. But sometimes the 20-day moving average comes up from behind and says, hey, I'll be your backstop. What do you know? 3 or 4 days later, this thing has nice flavor again, so it's got kind of a bigger picture. I remember the short float is very strong on this one. We're back above the key moving averages. Would have been nice to see it close a little bit higher, but it's also kind of a low float as well. This thing's definitely back in play. I'm not in it, but there's no reason to get out of it if you are back in it, or if you're currently in it, or maybe you jumped in it down there at the 20. All right, next up, I showed you, Michael, how to get pre and post market on the channel bar. Oh, on Coke, on KO, you'd like to talk about the 130 moving average. Not sure which one you're talking. Oh, that's my daily chart. That's why I see what you're talking about. This is what he's talking about, everybody. This is what Bill's talking about. Nice recovery candle, big hammer at the close there on a 15-minute, right off of a place where Coke has shown levels of interest and support before. So yeah, not a bad place to go out. And this is a good example, Bill, of me giving it to the end of the day to see how does this thing want to go out. You know, I put up a little nice fight there at the end. It's in no man's land on the daily chart, but I see what you're looking at, and that can become, yes, a piece of the puzzle as you're looking to try and figure out. But again, I like to wait till the end of the day and last 5 minutes and see how it looks. All right, yes, I was in a different time zone, Michael. I'm on the West Coast, so my hours are 3 hours before the West Coast. PRNT for Dave and Dimitri. We already did RVP, so we can skip that one. PRNT for Dave. Beautiful channel, beautiful trading trend is what I mean to say. I guess the point is if this thing shows up on the jam down, probably a good spot to buy it, because I would want to wait for this thing to touch the 10 SMA. It might even do it on tomorrow's open. Be aware for that, and maybe that's the signal that the algos want to spin around and go the opposite direction. Fubo for Michael. Nice consolidation. I wish it was consolidation above the 10, but you can see it's holding on to that 20 period. I hate it when that 10 curls over the candle, so it's got a lot of work tomorrow to get back above these last couple of days there. Then if it closes below this range here, below 42.60, I'd start to get a little concerned. Is there an IPO scan that's timely? The only IPO scan we have, George, is our halt and resume. If you just use a resume scan, it'll actually trigger as a resume the moment an IPO starts trading, but we don't have anything saying, hey, XYZ is going to IPO today, and scan immediately for that. EH for Ryan. Ooh, horrible, horrible downdraft today. I'll tell you what, when something sells off that hard, I want to give it another day or so to wash out the weak hands. If you're looking to pick it up down here, it looks like a nice bounce after hours, but give it a day or two to see what it really wants to do on something like that. Okay, I think we've got enough symbols here to walk me out. We'll do some more. NLS, nice, beautiful bounce that touched the 10 period yesterday, and it's trying to move higher. That's nothing wrong to say about that. KNDI. This reminds me of Solo. You know, just makes a lot of noise but doesn't go anywhere. There's Solo. Makes a lot of noise but doesn't go anywhere. That was KNDI. It does the same thing. So I'm less and less inclined to trust these things, but it's trying. But boy, there's never any follow through on that one, is there? Did we already do PRNT? We did, didn't we? Yeah. The jam down scan, sure. Let me put that back on history real time, and we'll share that. Jam down scan for tomorrow. I'll pop that in the chat window, of course. And there is that. And if you're watching this on recorded, you can email us and we'll give you that scan tomorrow. Let's see. Still in PSLV. So am I. Till target price for 3 weeks. I see no reason to get out of PSLV. I'm still in there with you. ACB. Aside from being a SCOTUS, well, pretty good spot to pick up down here after a big precipitous fall. 2 days of nastiness, been holding on. You know, it's kind of in the trend line. Can't say too much bad about that. STWD, very nice movement, but I wouldn't chase it up here at any moment. It's going to have a date with its 10-period moving average at some point, probably sooner rather than later. That's a lot of green candles there. That was STWD. Okay, AKBA. Very nice. I almost wish it touched that moving average today or yesterday. It might loiter around here for a while, but looks like it moved nicely out of that flag pattern. As long as it stays above the 10 SMA, should be good to go. On us, this one looks a little drippy. Drippy is a word I like to use because it dripped and fell below, and now it's in no man's land. It's probably got a date with the backstop down here in SPICE. SONM, really nice push. Look at yesterday, how it was really setting up nicely. You know, you never really know if they're going to go or not. There we go. I like to have it touch that moving average, but that's an example of times when it never touched the 10-period moving average and just was shot right through it. But looked good yesterday. MP, I'll do about 5 or 6 more here. Looking nice, closed right at that resistance level. Hopefully you get some follow through in that one. VUZI. Oops, VUZI. Really nice 2 days recovery. Look for some more follow through tomorrow. If it can't get back above that, it's just going to drop into consolidation land, I'm sure. What do you think about SKLZ pullback, the skills pullback? Very nice. Look at how it caught that 10-day moving average. Exactly what I've been talking about. If you took that at home yesterday, you could have participated in pretty much all of today. Or, you know, I expect more out of this one. That's a nice looking name. That's a very nice looking chart there. All right, SOS, we'll do, I'm going to do 1, 2, 3, 4, 5, 6 more. I'm going to end with Emily on PLTR, and we'll be done here. We'll bring Scott in. So the final 6, SOS, huge gap play. Hopefully you were positioned before then. It's probably just going to flop around. A lot of space between the 10-day moving average. Makes me want to take at least some off the table when things start doing that. SONM, we already did that one, so that one's a bonus. CGC. Looks like I'm frozen up here for a second. There we go. CGC. I think that's yeah, one of the pot stocks. Look at how it got ahead of itself, came back and used the 20-day moving average as its backstop, and now it's trying to dig in. Doesn't look bad. LAIX. KJ. Really working off all that energy, but now the 10-day moving average has the attention of the price action. If it touches that 10-day moving average, it could be a very interesting entry if this is something that you're stalking. Another one for SONM. God, a lot of requests for this one today. Again, it would have been really nice to see that one beforehand. Maybe some follow through tomorrow. That was a pretty big move, but you know, imprint on what that looked like beforehand. All those nice rising bottoming tails, finishing each day with some strength above a rising 10-day moving average. Those are the ones you want to not lose track of. Last one is PLTR, and I'm talked out, and we'll bring in Scott here in a moment. Okay, well, this one's not looking too good. Hopefully you're not going to ride this one too much lower. If it does go lower, it's closed below all 3 moving averages, and I would not want to be sticking around too much longer if this one can't find its way back north. All right, guys, so I've dropped in all the requests for the chat window. If you're watching online, info@trade-ideas.com for anything that you want. Tomorrow we can send you the links for that you saw on here, but for now, I'll bring Scott back and he can walk me out with any announcements.
Yeah, thanks, Steve. A couple items on the way out. Grab that earnings ebook. Very important to you being successful during earnings season. So don't forget to pick that up. We've also got a podcast. The podcast comes out periodically. Just search for Trade Ideas Podcast wherever you listen to your pods. add us as a subscription, and you get the next one when it comes out. But do check out the archives and the ones we released already. There's a code, opportunity is good this month. Saves you 15% off your first month or a year of trade ideas or your upgrade from standard to premium. So go ahead and use that to save some cash. And as always, you can find Steve on Twitter at TodayTrader. We also have at Trade Ideas and some other handles. And Facebook.com has us at Trade Ideas Pro as our profile. So like that and share stuff we post with your friends. And any questions, send them to info@trade-ideas.com. That goes to our help desk software and gets you the fastest answer to your question. Thanks, Steve, for running this solo. And Andy will be back as soon as the weather improves in Texas. And thank you all. And we'll get that recording up later on tonight or tomorrow. You get an email reminder tomorrow from GoToWebinar with a link to where you can find it. Thanks. Anything else, Steve?
All right, nope, that's it. I'll see you guys next time.
All right, cheers, everyone. Have a nice day.